Good morning, everyone. This morning I'm going to talk to you about securitized tokens or tokenization of securities. First, let's talk about a little bit about my background. So I'm with Beyond Enterprises. Beyond Enterprises is a advisory firm that grew from strategic advice to 360 partnerships in the past 3 years, and we've worked on 50-plus projects successfully and seen an amazing evolution in the space. Me, myself, I'm a serial entrepreneur. I've been in the tech space for over 30 years and got involved with blockchain 10 years ago, pretty early, and fell in love with it. So tried to find ways to work with blockchain companies, work with blockchain technologies, which brought me to today having an advisory that has a good track record in the space. So let's go over some definitions first. What is a security? Security is a certificate or other financial instrument that has financial value, monetary value. So I'm sure everyone in this room understands what a security is because it's an angel investment firm, and we all have at least looked at deals. But what is a token? A token is actually a piece of software. It's a unit value that exists on the blockchain, and blockchain is one of the ways you can create a distributed ledger. So a token is a piece of software. A security is a representation of some equity or debt instrument and has monetary value. What happens when we combine the two is we get a tokenized security. A tokenized security is a digital representation of a traditional financial instrument. And you're going to ask, why combine the two? One's a technology, one has existed for hundreds of years. Why do we need a tokenized security? Well, when you create a digital representation of a security, you're doing a couple things. First of all, you're simplifying the ownership of the said security, because prior to tokenization, securities were held in vaults. You had third-party custody. How many of you in this room have stocks? How many of you own stocks? Okay, a couple people. Have you seen your stock certificates, physical certificate? Have you held them? One person. So of the 5, 6 people who own stocks, only one person actually had physical certificates. Why? Because most of your stock certificates reside with your broker. They keep them, they trade them with your instructions, and you don't necessarily interact with the underlying security. You just assign a third party to handle it for you. Well, with blockchain, you don't have to do that because you actually have your security tokens in your own wallet, and you own them. You can move them however you please without third-party intervention. What that does is it creates an opportunity for fractional ownership of very large assets. This is the biggest advantage I personally see in tokenization of securities, because if you look at big real estate projects, big infrastructure projects, obviously the governments try to fractionalize those with bonds and taxation and things like that. But when you look in the commercial space and the private space, it's very hard for someone to go and buy $1,000 of a skyrise right now. It's almost impossible to do. When you tokenize a security, because it's digital and because you can own very small pieces, you don't have to own units. With stocks, you can't have fractional stocks, at least not in the United States. You own one certificate, one stock certificate of a company. When you tokenize it, now you're able to own 1/10 of a certificate, one 100, one 1,000, which allows you to access a lot of illiquid investments with a smaller participation. Again, I touched a little bit, but the other advantage is tradability, transferability. It's much easier to do a token exchange than go and sell stock certificates, especially those of you that actually have the physical ones. If you have a paper, you need to take it to your broker or mail it to them. They need to verify that. I mean, the whole process from having the security to having cash in your bank can be as long as several weeks based on how old the certificate is and how quickly the ownership can be verified. Whereas with a tokenized security, it's digital, it's in your wallet, digital wallet, so either on your phone or on a hardware wallet or on your computer, and you can trade it as you please as long as there's a secondary market that it's listed in. What this liquidity also does is it creates an opportunity for secondary markets. Again, a lot of us own stocks, a lot of us may own bonds. I don't think you know all the markets that they're being traded on because your broker-dealer deals with those. So when you buy bonds, you don't necessarily ask what market is this trading, what's the volume on that market, how fast can I liquidate my stocks or bonds. With digital securities, tokenized securities, you have direct connection with the secondary markets. You create an account on them, you put your securities there for sale or you purchase directly, and by eliminating the middleman, you have clear understanding of the market size and your participation in it. Let's say I create a security token and you want to buy it. If you went to a secondary market that was offering that security, you would directly interact with the market as opposed to calling a broker, asking them to buy you something, and then you don't know where they're getting it from. I mean, how often does your broker tell you, I bought this on NASDAQ or OTCQB or New York Stock Exchange? That conversation doesn't often happen because it's seamless for you. There's a broker. Whereas with a tokenized security, you have access to which market you get it from and the market conditions. So those are the advantages of tokenizing securities. What are the disadvantages, and where does that leave us as far as future of the securities markets? Well, the challenge with tokenized securities is if you are the owner of that asset, then there's no responsible third party. So you can lose them, you can transfer them to the wrong address, to the wrong entity. And there's not a lot of recourse if you make a mistake. So it's really great that now you have a direct relationship with the secondary markets and you cut out the middleman, so it's more liquid, there are less fees. On the flip side, it requires more responsibility and more of a mindfulness that this asset you own, if you make a mistake, there's no necessarily recourse like recalling, the securities you sold or things like that. So I think that's something to be mindful of. Where does the future lead us? Where I see securitization of tokens go is it's the lowest hanging fruit. So right now, there's a lot of conversation around blockchain. There's a lot of conversation around crypto assets. Most of it is somewhat negative. Some of it is positive. But as soon as the institutional investors realize the practicality and the benefits of tokenizing securities, in the future, what we're going to see is the tokenization is going to then take over specific industries. Because as we see it works with securities, and more securities transactions are done on a distributed ledger, done on decentralized exchanges, not centralized exchanges like the ones we have right now, people are going to start feeling more comfortable with it. With that comfort level, the decision makers, the industry decision makers are going to start looking at where the DLT and where blockchain can additionally impact their industries. So I think in the next 5 to 10 years, we're going to see a lot of industries first tokenize their securities, speed up the market movements, bring more velocity, potentially bring more people in. A lot of the millennials right now are not interested in traditional securities. They're not familiar with them. They didn't grow up with them. I mean, it's just with the new technology injection into old financial institutions, we're going to see a younger crowd start investing again. And once industry leaders realize that this is not the enemy, blockchain is not a bad technology, and tokenization doesn't harm their business, but instead increases their business. Because of course, with more liquidity, you can do more trades. Again, the velocity goes up, so more people touch the same assets, because now it's not a paper that we're passing around, but it's actually a digital representation of it. We're going to see entire industries that get tokenized. So what are some of the examples of industries that can be tokenized? I mentioned one. We're going to start seeing more and more tokenized businesses in the real estate industry, commercial real estate, infrastructure projects. Instead of only the ultra wealthy and the big funds being able to take on a project that costs hundreds of millions of dollars, we're going to see everyone in a neighborhood come together and say, we want a new commercial building, we want a bridge, we want to have a skyrise, and be able to fund their projects internally by pooling thousands of people into the project instead of hundreds that need to put several $100,000 each. Another example would be a tokenized financial sector. So a lot of the transactions, a lot of the things we do right now require trusted third parties, your bank, your escrow agent, your actuary. I mean, there's a lot of people that touch each transaction, whether it's a line of credit or whether it's a loan or a simple transaction that requires a wire transfer, like SWIFT. With tokenization, we're going to see less and less middlemen touch the transaction, and more things being automated and done in a decentralized fashion. I'm sure you guys have read about JP Morgan Chase creating its own settlement coin, and that's a really strong indicator of how the mood has changed, because if you look at its CEO's comments from 2 years ago, just 2 years, there was a lot of negativity and hostility towards Bitcoin and blockchain and what it represents. Now they have an internal department that actually is experimenting with this. And although they're not putting all their internal transactions onto the blockchain, they're starting with a small portion. And to me, that's a huge win, because as I said, as more industry leaders and institutions get comfortable with it, we're going to see never before seen applications of blockchain in all of the industries. And the third one is, again, in similar tone, but would be a tokenized commodities market. Let's take carbon credits, for example. Are you guys familiar with carbon credits? Okay. Carbon credits are credits traded by projects that either preserve rainforests and other climate positive projects, or pollutants that have to offset their emissions into the world. Right now they're traded in tons. Us individually, we don't need to buy a ton of carbon credits for anything we do daily. But if there was a way to offset our individual footprints, we would pretty much, probably all of us want to do it in this room because we care about this planet. And there is a project right now using blockchain that's trying to do that. So again, it's not just the financial sector, it's not just money transfers or digital money itself, it's nature preservation, rainforest preservation. It's anything you can think of where you can create efficiencies through streamlining the process and taking middlemen out. Those industries are going to be the ones that get tokenized the first. I just want to leave you guys with this one statement, because I think that's what I came here to say. You hear a lot of talk about security tokens, tokenization of this, asset-backed tokens, things like that. And that's just the beginning. Tokenization of securities is just the beginning. And I think we have a huge opportunity here to change entire industries with blockchain and impact a lot of lives. I can't think of any better technology to create a more inclusive society and a more inclusive economic system than one we can create with blockchain and using it the right way, because blockchain is just a technology. It's not a silver bullet. You can use it for good, you can use it for not so positive outcomes. And I believe we're gonna see some amazing projects pop up and tokenize entire industries. Thank you. Any questions? Please. Can you speak a little louder, please?
Who is it?
In future, 3 or more years later, the money flows will come down, which has happened up to now. Do you think that the blockchain will replace, in this meaning, in this understanding, the thing what I want to say, the dollarization will finish in 3 or more years later? The scientist says, look like a thing. Where can it start? It starts from the blockchain mentality or somewhere else. Did you understand what I mean? The dollarization will finish. Now we are under dollar money.
Let me try to see if I understood. So you're saying, will blockchain reduce the influence of US dollar in the world economy? Well,
True, yes.
Yes and no. So blockchain is a technology. It's not a currency. We are already seeing some movement from other nations to rebalance their money reserves. So I don't believe in 2-3 years US dollar is going to go away. That would be a very drastic and unexpected thing. where I see, I mean, what's happening this year is already China, Russia, and a couple other larger economies are rebalancing their treasury and giving less weight to US dollar and picking up other currencies, maybe euro, maybe some other currencies to have a more balanced treasury. Because blockchain is not a currency, it's not going to replace any fiat currency. A future application, because I don't believe anything that's out there right now is designed or is the best fit to replace a fiat system. There are blockchain projects that can displace SWIFT, displace interbank transfers, things like that, where you're just moving numbers, but you can do it more efficiently with blockchain. As far as fiat payments, the challenge resides on the retail side. So at the end of the day, until you can go and buy a loaf of bread with whatever digital currency you have, you're not going to see fiat disappear. So is it going to help transition from a paper money society to a digital money society? Absolutely. We already see that without blockchain in China. If you go to Shenzhen and you either pull out a credit card or cash, they look at you in awe. They just don't understand why you're offering that, because every restaurant has a QR code at the table. So you have your meal, then you scan the QR code, it tells you what it is, you approve it, and you pay for it. So even without blockchain, no distributed ledger, you can do it in a centralized fashion, and you can digitize most transactions we have. But for global adoption, so reduction of reliance on US dollars or euros, I think it's going to take a longer time, and it's also going to probably take a new, not yet seen application of blockchain as a cryptocurrency to get there.
Yes, I understood well, sir.
Okay, thank you everyone.